You're watching The Open. I'm John Ehrlichman. Ontario's economy is in focus this morning, and like many of its provincial counterparts, larger than expected deficits have become the near-term norm. In Ontario's case, the provincial deficit is now expected to be $9.8 billion for the upcoming fiscal year, a notable increase from the $5.3 billion deficit that had been pegged during the fall economic update. The provincial government does see a path towards a balanced budget. That has, however, been pushed to the fiscal year 2026-2027. Ontario's finance minister is Peter Bethlenfalvy. Before his political career, he worked on Bay Street and Wall Street. In fact, on the subject of Ontario's finances, he was once on the other side, assessing the fiscal picture during his years at the debt rating agency DBRS. And Peter joins us now. Good morning. Thanks for your time.
Good to be with you again, John.
As a former Bay Streeter, you'll know we like at BNN Bloomberg more numbers, a little less on the political front. I mean, for those who are hungry to see an end to deficits, they keep hearing about these stories in a lot of provinces at the federal level. What would you say is your biggest fiscal challenge right now?
Well, I think the global economy, with these high interest rates slowing down the economy, we've seen the UK go into recession. Japan is in recession. The U.S. is exceeding expectations. That's positive. It has an impact on Canada. But we're not immune, John, from those global forces, those high interest rates and inflation. So, while we've delayed our path to balance by a couple of years, we continue to be very prudent. We've seen other provinces in Canada, Quebec having almost $11 billion deficit, and they're not balancing for some time. And BC has no path to balance and hitting their highest deficits of all time. So we're not immune, but I think on a relative basis, Ontario is doing better than most, and we continue to invest in critical infrastructure. We continue to invest in our economy and the workers and people that are getting the job done.
If you were still at DBRS, how do you think you'd describe Ontario's fiscal picture?
Well, I think at DBRS, they rate through the cycle, the economic cycle, and we're in the slowdown part of the cycle. I think, DBRS would continue to look at the interest cost to revenue. Ours is the lowest it's been since the 1980s, at around 6.7 cents on the dollar. I'd look at the debt to GDP, which is lower than 40. Our target's 40, and we're coming in underneath that. And we have a path to balance. And we're also investing in critical infrastructure that is, and that's why we're borrowing monies to invest in roads and invest in highways and public transit and hospitals and schools, which is all productive for society, and these are real assets and long-term assets. These deficits and these economic slowdowns, they're cyclical, they're temporary, but these investments are long-term, and they're good long-term and real-term investments.
Minister, a lot of people with a deep understanding of the economy, including our central bank, have respectively encouraged our governments to do their part in the fight against inflation, find ways to curb spending. As you know, the Premier in Ontario called on the Bank of Canada to start lowering interest rates. He had said people need a break. Can you help us explain, though? I mean, you talked about some of the spending initiatives, but can you explain how the province has a message like that while at the same time ultimately running deeper deficits than what was previously projected?
Well, I think we're doing all the things. We're not adding to inflation here. We're in just the opposite. We're investing in the types of things that will help grow the economy and be productive. So what does that mean? It means building more houses in the housing stock. It means investing in the infrastructure necessary to move people and goods to market, like highways. We'll be in gridlock. Gridlock is completely unproductive. So building highways, public transit, taking cars off the road. We have 4 subway lines under construction. You've never seen that probably in 100 years in North America, certainly here in Toronto. So, I would say that the things that we are doing are helping to build a stronger economy, a stronger Ontario. And faced with the economic slowdown, you have 2 choices. Do you cut or do you keep going? And we choose to keep going.
Now, Ontario had unveiled an infrastructure bank to address some of those needs to build big projects for a sizable population. In the past, you've already explained that for us in detail. So I do want to get into some of the specifics. When it comes to making those investments as a government, having investment partners is also important. Have you been able to attract specific investors to those projects? Are there any examples you can share with us here?
Well, we just launched what we call the Building Ontario Fund. in the last couple of months, we've already got a chair of the board and board directors looking for a CEO in the top executive pool. But I also know they're working on transactions as we speak. And, we've mentioned that we're targeting focused areas like energy, long-term care, student housing as examples. And we're going to be moving as quickly as we can because, the infrastructure deficit, John, that we inherited, when you don't build schools, if you don't build highways, if you don't build transit and subways, you just delay the inevitable and you get unproductive an unproductive economy. So, this will be just another place that we can do more infrastructure, do it faster, and build things that otherwise might not get built.
On a related note, as you know, there is a debate taking place right now between Canadian business and our big pension funds, the kind of investors that could be involved in some of those projects you're talking about. And at the core, this debate centers around a belief in some business circles that Canadian pension giants aren't investing enough here at home. Now, some pension players have responded saying they want flexibility to work around the world for the best investment opportunities for their constituents. They don't want governments telling them what to do. But where do you come down on this issue?
Well, look, I think we've got some of the best pension plans in the world right here in Canada. I call it the Maple Nine. 4 of the 9 are right here in Ontario, and they're doing a fantastic job, investing pensioners' money safely and soundly for the long term. And, that's a real comparative advantage that we have here in Canada. Of course, I would love to see them invest more. As a politician, who wouldn't? But at the same time, I understand the way you get them to do that is put in place the conditions in place that allows us to compete for that capital right here in Canada. And I think that's a big reason for our Building Ontario Faster Fund, that we can tap into the great knowledge and pool of capital that we have here. They understand the environment. There's no currency risk when they invest here. So I look at it, let's work together with pension funds, long-term investors, and talk about how we can get them to invest more here, but what can government do to make it more attractive so they can hit their rate hurdles and they can continue to invest prudently for their beneficiaries.
And Minister, just a final question about productivity. You talked about some of the efforts your government's taking to build more homes. Economists have talked a lot about how our productivity gap, particularly with the U.S., maybe could be helped by having less focus, i.e. resources, money, and time into just the simple idea of home ownership. But on a separate issue, I was wondering what your reaction was to Carolyn Rogers' comments yesterday. The Senior Deputy Governor of the Bank of Canada described our weak productivity as an emergency for Canada. Ontario itself makes up something like 40% of Canada's GDP, so that would seem to be in part directed at a province like Ontario. One area in particular she zeroed in on was better skills training for workers. Do you think we're falling short on that front?
Not at all. In fact, I'm sure she would say Ontario is probably doing more than just about any jurisdiction on the planet. I'm going to be very bold there. We put in billions of dollars in skills training. In fact, our skills development fund, which I announced in the budget, we're putting in another $100 million, and for training streams. We're working with trade partners, private sector, and union, non-union, to retrain and skill our workers of tomorrow. We've done over 500,000 people in that program so far. They're the ones, we got 141 skilled trades. We're investing in those people who are going to build the things, build the hospitals, build the roads, build the subways, build the nuclear, refurbish the nuclear, and build the new small modular reactors. So I would say, what I would say is that government is doing a really good job. We're investing in technology. We're reducing taxes. We're reducing regulations and red tape. We're investing in long-term productivity gains. We're investing in people and giving them the tools to do their job. We need the private sector to step up. We need companies across Canada to invest more in research and development and make those investments and invest in their people, invest in software and give them the tools necessary to do their job. Advanced manufacturing, John, if I just look at the electric vehicle revolution going on here, that's all advanced manufacturing, and it's happening right here in Ontario. So I think we're well positioned, but there's always more to do, and I just call on the private sector to do more.